Now, let's look at those same examples of the golden crosses breaking over VWAP with the exponential moving average crossover strategy that I use. For this strategy, you only really need two of the exponential moving averages to be on. The ones listed here are the ones that I generally use, but for this strategy, we'll just be turning on the EMA 8 and the EMA 13. EMA 8 line will be white, EMA 13 line will be green. Let's take a look at the first example that we looked at before with DraftKings. As you could see, if you remember from the example before, the MACD had a golden cross. This was a bullish indicator that the stock could move up from here. Along with this, it also had its break above the VWAP. If we turn the VWAP off here and get a clearer picture, we could also see that the EMA 8, or the white line, was also crossing above the EMA 13 after it broke over the VWAP. When the EMA 8 is crossing above the EMA 13, this is also a bullish sign. So one thing that I look for in a lot of my trades is this all happening at the same time. When you see a break of VWAP along with a golden cross prior to it, and also the EMA 8 crossing above the EMA 13, this is a strong bullish sign that the stock can move up from here. If we look at the example from Disney, you can see that the exact same thing was happening at this moment as well. Here's your golden cross from the MACD, the yellow line getting above your signal line. Here's your break of VWAP. The yellow line here is your volume weighted average price. Here's your hold of VWAP. And then finally, we see the EMA 8 cross above the EMA 13. Again, the EMA 8 is the white line. The EMA 13 is the green line. And finally, the final example that we had was on Apple. Again, a break of VWAP along with a golden cross. Once you can identify that the 5-minute candles are going to be holding above the VWAP, this is where you could buy, but you could also wait for the EMA crossover for better confirmation. Once you see the EMA 8, the white line, crossing above the EMA 13, the green line, this could be an indication that the stock will move up higher from here. Now, this also works the other way around. If you see an EMA 8 crossing below an EMA 13 on the 5-minute or the 15-minute, by the way, this could start to mean that the stock is going to move down from here. In this example, Apple broke down out of its uptrend, also had a death cross on the 5-minute chart where the MACD line was now sinking under the signal line. And then MACD now goes under and negative, right? And then we also see the EMA 8 crossing below the EMA 13. Now keep in mind, this example has the volume weighted average price under it. So when you take a trade like this, if the volume weighted average price is below where you are buying puts or shorting, always expect there to be possible support at the volume weighted average price. Generally there is. As you could see in this example, Apple fell down to the VWAP, bounced back up from there, came back down, actually went under it for a little bit of time here, but then came back up again. But as you could see, the candles were basically having resistance at the 13 EMA. So if you were to take puts at this area here, your exit could either be if it bounces off support at the VWAP, which would be fine because at this point you would have a decent amount of profit on the table. However, if you wanted to try to ride it out for the maximum profit potential, you could risk your gains and say to yourself, okay, I will exit this trade if I see any of the 5-minute candles truly closing above the 13 EMA. And as you could see in this example, the candles basically rode the resistance at the 13 EMA or the green line all the way down until it finally broke under VWAP and ended up falling lower. So this would be a perfect short entry or put entry at this point. Whereas right here, would be your confirmed good entry on calls or a long position. That is how I use my EMA 8 and EMA 13. I also use other indicators from the exponential moving averages, such as the EMA 50 and the EMA 200. These will generally show me where the resistance or support is. For example, if I turn on the EMA 50 on the 5-minute chart, the EMA 50, I like to call this your second VWAP because generally you're going to see resistance or support at the EMA 50 on the 5-minute chart while you're day trading. So as you can see in this example, it did come up, and now the orange line here is your 50 EMA. It did hit a little bit of resistance here at the 50 EMA, but ended up finally going over it at this point. And then as it was coming down, it tried to come back up and hold a little bit of support at the 50 EMA, but ended up dropping back down. It's good to have the 50 EMA up just so you could see where those points of resistance or support may be. The chart doesn't always break above the 50 EMA, and it doesn't always break below the 50 EMA. In this example, it did, but sometimes it doesn't. So you could turn this on as well to see where you could maybe start trimming your positions if you were in calls, or trimming your positions if you were in puts. Then we also have the 200 EMA. Now the 200 EMA, generally I like to use this on the 1-minute chart when day trading. Let's turn it on here. This will be our purple line. So as you can see, the purple line here did act as a kind of support on the 1-minute chart in this area up here. Eventually it ended up breaking down under it, coming back up, hitting again resistance at this point, trying to hold above, but it could not. So again, if you use the 200 EMA on the 1-minute chart, this could be a good point to start trimming your position and taking profits, or at least setting a stop loss if you do not want to lose on the trade that you are in. It's good to set a stop loss on a trade that you are already green on, so that if it does come back down, you get stopped out for profit and then have the opportunity to enter for a better price. That's my short and brief lesson on exponential moving averages, how I use them to day trade. Thanks for watching.